In today's video, we have a lot to unpack. Now, I am going to cover the whole entire market in terms of Dow Jones, Nasdaq, and S&P 500, including the economic calendar. And I do post these videos daily, so I highly encourage you to double check the latest video on my channel so that way you get the most up-to-date information. And before I get to the charts and before I get to the economic calendar, there is a lot happening around the world for the most part in terms of, for example, Israel versus Iran kind of stuff. Iran shot missiles to Israel. And that is a conflict, and things are getting tense. And then as well as we have the East Coast, Gulf Coast ports. And the reason why this is an issue, so they're on a strike. And given that these ports are not being unloaded, they could go to the West Coast potentially, but at the same time, that's going to create backup on the West Coast as well. And then you're thinking, okay, well, once they start up, it'll be fine. Well, the thing is, though, mind you, these ships have to go back. So all they're doing is just waiting by the ports to be unloaded, and then they'll be able to get sent back. So this is going to cause delays in the supply chain, which is unfortunate. And on the West Coast, even if they back up, it's just basically a massive delay for pretty much the whole entire supply chain. Depending on how long it takes, though, how critical it will be in that case. Now, the reason why this is as well as important, it's not just for the supply chain for consumers, it's for that fact that it could impact technically earnings for some companies based off these ports being delayed and backed up. So there's that issue. Now for the economic calendar, so basically be mindful of those news. And then for the economic calendar for Wednesday, October 2nd, 2024, at 8:15 a.m., we have ADP employment for September. At 9 a.m., we have Cleveland Fed President Beth Hammack gives welcoming remarks. At 10:05 a.m., we have St. Louis Fed President Alberto Musalem gives opening remarks. And at 11 a.m., we have Federal Reserve Governor Bowman speak. And at 12:15 p.m., we have Richmond Fed President Barkin speak. Now, for the market, the trend was still to the upside as of yesterday. But then the pull, like in terms of longer term, like I stated in yesterday's video, I expected today actually to be a down day. But you could argue that because of, for example, the tensions in the Middle East kind of stuff, they could obviously have been causing the pull down. But based off the MACD lines for the 1 month, 3 month, and 6 month, I was projecting that today was going to be a down day, which it was. And then in terms of longer term, 1 year, 5 year, and the whole entire chart, that was expected to be more of an uptrend, right? And then I stated that there is some down days that's going to happen regardless if we're in an uptrend. But I would say because of the tensions, because of the ports being back in terms of strike and then going to be potentially backed up, and indications are flipping. So for example, looking at ETF, SPY, ETF for the S&P 500, here's the 1 year chart. Now, if you're new to the channel, this is an MACD line, indicates if we're in a bearish or bullish movement. Yes, it's still in the bullish movement, but it's getting close to drop down, right? That's the only problem. And then plus the 5 year chart, it was crossed over to a bullish movement, but it's getting pulled down dramatically. So what I want, in my opinion, this is just my opinion, please do your own due diligence and research before buying and selling. Yes, the 1 month, 3 month, and 6 month for the S&P, Nasdaq, and Dow Jones are showing downside. So I'm expecting more downside. I'm not expecting a reversal to the upside for the time being. And in terms of, are we still in uptrend? If we have another 2 trading days like we saw today, coming up back to back, then I think it'll reverse these directions that were showing us uptrend, reverse to the downside, and then we'll basically start heading down completely for the time being because of the tensions again and the ports and so on and so forth. But let me just show you the rest of the data points. The all chart is still 50-50. Now, by the way, this is the SPY ETF for S&P 500. We have an upward trend resistance line dating back since 2010. Mind you, the market was still going up. Doesn't mean it wasn't going up. It's just every time it went up had issues. We are in the mid zone, and there's been times we were in the mid zone and still got pulled down to the upward trend support level, right? The thing is, though, right now, given how the all chart and the MACD lines for 1 year and 5 year, it is still, in my opinion, like a 50-50 split of will we go up the rest of the way or get pulled down to potentially support levels at one point. Now, it's not going to be a drastic drop, obviously. It's going to be gradual and all that stuff because I don't think so far everything is just beginning. So it could end soon, and then we could get a bounce back up. And if it takes a long time and then other things come into conflict, then we can start getting pulled down more dramatically. But I would have to give it personally 2 more trading days to see. But again, the short term, so for tomorrow's trading day, it looks like more downside is coming based off the 1 month, 3 month, and 6 month MACD lines off the chart. Plus, one thing to note, given how we were at a critical level, so I believe it was probably 4 videos ago, I stated that since we SPY, so ETF for S&P 500, Dow Jones are all-time high levels, right? And then the Nasdaq ETF QQQ, ETF for Nasdaq, I'm going to show right about here. So it has the upward trend resistance line dating back since 2010 as well. Same thing, but broke through since 2020 to 2022. Came back underneath, had issues passing in March of 2024, and then created an all-time high in July of 2024, just like the rest of the market. But the only thing is, though, we came back underneath the upward trend resistance line dating back since 2010. So here's the upward trend resistance line dating back since 2010. And we are in the level to try to pass that resistance level once again. So S&P 500 all-time high, Dow Jones all-time high zones, but then the 2010 level that's been keeping down the Nasdaq for quite some time. I think it was pretty much somewhat primed to get pulled down, right? Even though the trend is pointing more to the upside. So the question is, are we actually heading down because we came past this level and then the rest of the market is all-time high? So it's a good time to get pulled back a decent amount, potentially. Right now, the indications are still, I would say, as of today, 50-50. They were upward trend showing in terms of indications to the upside. But right now, I'd say a little bit of 50-50. And we'll see. If we have 2 more trading days of downside, we've broken a decent amount of moving averages, right? So let me see the 1-year chart. Okay, so the 6-month, I guess, then. So the 6-month and below. So 6-month, 3-month, and 1 month. We've broken the 50-day, the 100-day moving averages, which are critical points. But you could argue we are not necessarily, we could probably head down to lower levels and then bounce off the moving averages of, like, for example, the 1-year, 50-day, and 100-day moving average. But we would have to see. In my opinion, just we need to see at least 2 more trading days, just like we saw today. If we see that, then a lot of indications are getting pulled down to the downside. And then that was the high that we saw in terms of S&P and Dow Jones, and then Nasdaq 2010 level. Again, this 2010 level doesn't mean we can't pass it, right? Because here's back in August of 2024, so recently we had false breakouts but still got pulled down, and this point is actually resistance because you see quite a bit of resistance, touch points. And then once again, this was pre-market, did pass in terms of false breakout, but then there was quite a bit of resistance right there, right? Mind you, lines might not be perfect, but they have passed. And then during this time, July of 2024, this was the time it did pass the upward trend resistance line dating back since 2010. But the thing is that's critical for the Nasdaq was everything went up during this time in July. So S&P, Dow Jones, and Nasdaq all created their all-time highs back in July. Now, the only one that has not retested this all-time high and passed it is the Nasdaq. The S&P and Dow Jones both tested it and passed it and created new all-time highs past the July of 2024 all-time high. So in my opinion, this upward trend resistance line could be the critical level of being tested nonstop and essentially not going higher for the most part. Now, it will go higher because the longer we take to pass the upward trend resistance line, the higher the high will be if we were still to stay to this zone. And then ultimately probably get to this point of the previous all-time high. But given the nature of the S&P and the Dow Jones being at an all-time high, and then the Nasdaq being as well as at a critical level, because the way I see it is all-time highs are critical levels as well. And then indications were pointing up to the upside, but we got a massive drop, pull down, and potential reversal of indications. This could be the beginning of a potential decent pullback. I would just, again, have to pretty much see the next few trading days how they go. If you found this beneficial, consider dropping a like. It does help out the channel. Appreciate it. And if you want to be notified when I upload my next videos, consider following, subscribing, so you'll be notified when I do. And basically, just in general, just in case you didn't get the idea, basically S&P, Dow Jones, and Nasdaq are all showing the same thing for 1 month, 3 month, and 6 month, which is a down day for tomorrow based off MAC lines and being below moving averages. And then in terms of the 1 month, 5 month, and alt chart, they're all showing the exact same thing, which is a potential still continuation of the uptrend, but it's pretty close to getting reversed to the downside. And if that is the case, then we're going to be in a downward trend moving forward, basically, for the time being, right? But I would have to still see two more trading days to the downside. That's personally my opinion. But yeah, thanks again for watching. Appreciate it. Take care. God bless and peace.